As June rolls over into July, this marks the end of the first half of 2023 and we enter into the second half. This is a good opportunity to take inventory and take a look at the portfolio and the investments that I have positioned going from the first half to the second half and for an indefinite amount of time going forward, depending on company performance and how the stock reacts. All right, as you can see in the middle of the screen, we see the major holdings of my portfolio. I will comment a bit on each and every one of them. There's one large relative change in the portfolio. We'll go over that as well and why it's still there. But I will make brief comments on all of these larger holdings, why they're in my portfolio and why they will continue to be in my portfolio. There's also a few that I'm considering removing and you will hear the reasoning why. So brace yourself, make a cup of tea. This is going to be a bit of a longer video. I anticipate I will have to talk maybe 15 minutes or something to be able to cover all the investments that you see on the screen right now. All right, let's just get right into the video. The first one is Porch Group. I've done quite a few videos on this company, but in relative size, this is the largest one in my portfolio. And it's the largest investment for a reason. This is due to the explosive growth that the company has had. And in my opinion, I think they will be profitable in this second half of the 2023 year. And this means that the stock will have to be re-evaluated. We will have to look at a new price to earnings ratio and put an appropriate multiple on this due to the high growth of this company. It's been quite the roller coaster as I bought this stock $1 something in the low $1, and then the CEO Matt Ehrlichman bought a lot of shares, and for this simple reason the stock rallied to about $3, something like this. So a big rally, and then all of a sudden it drops down to about $1 again. I think it's somewhere between 1.2 and 1.4 right now. I don't check the stock every day. This is one of those buy and hold opportunities. I've been able to get into this stock at a very low price, and with the owner operator and a lot of these things speaking for the performance of the company, then I think that the stock price will re-evaluate to more accurately reflect the business as the market goes forward and as the company becomes profitable. All right, that's the major holding. Then the second largest holding is StoneCo. This is a Brazilian payment processor. They're one of the major players in the Brazilian market, and in my opinion, I don't think it takes a genius to understand that the use of cash will become less and less common in Brazil, and they will shift towards using cards as the economy continues to mature. And yes, I realize that we will never see the price to earnings multiples that we see of European and American companies in this type of emerging market environment. There's a lot higher risk. It's putting a damper on multiples. I'm not arguing with that. However, the allure with this company and why it's in my portfolio is the potential for future outsized dividends. Just take a look at Petrobras for an example. And in this case, once the company has captured more of the market has matured more, and the payment processing way that Brazilians transact has changed, well, then the next natural step will be to make large dividend to investors. And in this case, people who bought into this company is less famous investor Warren Buffett. Don't know if you heard about him. He bought at about $10 in the IPO, and the stock price has slid down to about the same level when I purchased. It has gone about sideways, however slightly upwards here in the second quarter of this year. Performance wise, this is due to the continued terrific growth that this company has showed, as well as they've had some rocky business transactions that they've put behind them in the lending department. So a lot safer of a bet now than it was in the past, and the price is still very low. It's a lot lower than the very high highs that we saw back when interest rates was extremely low, and the potential to make a great deal is indeed there, and that's why it's a large holding in my portfolio. The third largest holding is Palantir, and this is the biggest change in my portfolio. It has overtaken Bauch & Health companies in place number 3 in the portfolio, and this is due to the tremendous increase that we've seen in stock price from Palantir. This is both due to the AI hype, I realize, indeed, there's a lot of talk about that in the media, but the company has also become profitable here in the last quarter. And this is something that I never would have foreseen. The company focused a lot on profitability rather than growth at any cost, and Palantir even put gold on the balance sheet back in the beginning of the year. It's almost as if they anticipated that market conditions would indeed deteriorate. It's an eerie timing. However, this profitability is pushing stock price higher. In the disappointments division, I must say that I was hoping for 40% year-over-year growth in the past. However, coming in at 20% and being profitable now, it's okay given the macroeconomic conditions that we see. And to comment on the business, I used to sell data centers, and in this process I would speak to a lot of C-level people. I would look at the infrastructure, the way applications and platforms was set up, and in the corporate landscape today, it's quite fractured. There's a lot of different applications that don't really communicate, and Palantir is indeed positioned to take advantage of this with their commercial offering, and I believe that they can see great success in the market with the technology and the software that they offer today, and a lot of growth can come from modularizing, put parts of the software into modules and sell them separately. Quite a hard English word to pronounce if you're not a native speaker. However, this is added value. This is something that will open up the corporate and the SMB segment, and not only the enterprise deals that they're focused on now. So there's a lot of potential for future growth for this already profitable software company. So it's going to be quite interesting to follow along. A lot of potential for future increases in stock price for Palantir. Then we have number 4 on the list, Bauch Health Companies. And this is an asset play. The famous investor Carl Icahn has a big stake in this company along with some other investors. And in this case, Bauch & Health Company operates like a holding company. They have Bauch & Lomb under their umbrella, and they own about 80% of this company. And in my opinion, the stock price does not reflect this. I think that the stock should be a lot higher given the total value of the individual sums of the companies that Bauch & Health Companies have in their portfolio. Indeed, there's the debt that's dragging down stock price. However, Carl Icahn has proved himself a lot in the 80s as a corporate trader, as someone who puts the interest of shareholders first, and as a shareholder, I really hope that he unlocks a lot of value for us as investors by spinning off Bauch & Lomb, giving the stock to shareholders. And there's also potential for a skincare company called Solta, something like this, to IPO in a more favorable market condition to pay off and reduce debt in this company. There's been a lot going on with a new CEO in Bauch & Lomb, the company that they own, somebody that's been a part of this type of M&A activity before. So that's a sign for the future, an omen of what could potentially become of this company and the value that could be unlocked for shareholders by separating assets. So this is a lot more of a value investing play in my case. As you can see, it's a mix of growth and value and some dividend as well. And then we have Vitrolife. This is a Swedish small cap stock, and it's positioned to take advantage of one of the global megatrends in the rise of the economy, as covered by investment bank Morgan Stanley. If you take a look at fertility clinics around the world, this is a very expensive procedure that's needed when childbirth has been put off for a long time. And the components needed in this that the fertility clinics use is produced, manufactured, researched and developed by Vitrolife in a lot of cases. Tremendous technology, one of the first movers. They're seeing great growth in North America specifically. And this company is indeed positioned to ride this macro trend. The company really dipped when the whole stock market came crashing down, anticipating a recession, and interest rates went up and the macroeconomic climate soured. And this is when I decided to buy in a large stake. The company has gone up a bit since then. However, I believe that the company has a lot more ground to take, and the stock price could go a lot higher with continued growth, with the socio-economic climate doing what it's doing with regards to the delayment of childbirth. There's a lot of other macro trends to ride as well, such as the aging population, looking at leisure and medical treatments. But this is the way that I choose to ride one of the global megatrends, by having this company Vitrolife in my portfolio. As always, I hope I get more suggestions on some of the medical companies for aging population. I think this could be an interesting addition to the portfolio going forward if I find a company I like in that segment. Alright, then we have Foot Locker as the next company in relative size. This is a company I bought at the extremely low price to earnings ratio. It's had a bit of a roller coaster since then, going up a lot and then coming down, dropping down here recently. I bought this company for dividends. I think that at the price I bought it at, it will provide above market returns. This is a company that I should look at again to see if there's an opportunity to buy more right now. However, it's a lot more exciting to look at small cap companies and see if there's somewhere there you can allocate capital for larger gains, rather than looking at a company that I believe will just slightly outperform normal market returns. However, there's nothing wrong with collecting dividends and doing safer plays. I love Foot Locker as a store, to be able to go in and try on shoes. And looking at performance, I think that this company indeed has the potential to just give slightly above market returns. And as they say about gold, it flees the master who tries to force it to make unreasonable returns. And by aiming for reasonable returns, the principle remains safe. This could be said in the case of Foot Locker. This is more of a safe, boring play that I put into my portfolio. Then we have Africa Oil. Africa Oil has performed extremely well. The oil and gas sector has performed extremely well. As you remember, in the past, a big part of my portfolio was this LNG company called Huang LNG, but they were bought up, so it freed up a lot of capital. But I still have some investments in the oil and gas sector. In Africa Oil's case, they recently found a large finding, offshore oil finding off the coast of Africa, with potential to be the largest one in the world, even larger than the current largest finding off the coast of the Gulf Coast over there in Mexico, South America. And in this case, there's a lot of risk built into the stock. This could be a potential sell in my case. However, it's a fun stock to hold. There's large upside with regards to the exploration part of the business. The company has communicated the potential for dividends going forward as well. However, nothing concrete right now, as they're still focusing on the exploration and development of oil fields. And this company was indeed quite the lucky find with regards to exploration. I'm not gonna say anything else. I took a position just to follow along and bought some extra, and then they strike black gold in the ocean. It's not something you can plan for as an investor. However, oil and gas is performed terrifically. My opinion on the sector now is that I'm watching it with caution. It's been a sector that's been underinvested in for a long time. However, with the tremendous gains in stock price in the sector that we've seen recently, one of the trends with regards to stocks is reversion to the mean. When a sector performs extremely well, capital rushes to it, and then it tends to perform lackluster and above normal market returns in the time period after that. And then the investors sell out and they buy the next thing that's been performing extremely well, and thus the average investor returns continues to be in the low single digits as compared to just holding a index fund. And in this case, I don't think it's smart to throw money just blindly at the sector. However, as with oil and gas, it's a specific example, as it's been very underinvested in. As you know, I will not drag on this video to talk about all the reasons, but some of them we can clearly see. For example, the political reason communicating that solar etc is the future. And as a business leader, when you listen to this, would you in your right mind allocate capital to more projects when everybody is communicating that this is not the future? Well, you're going to pay out money in the forms of dividends to investors, as we see that this sector indeed do. Right, enough about oil and gas. Let's get to the last company here on the list, Atos Software. This is a German company, and they're doing the workforce management software that you have on computers of employees. So basically, when you're a new employee, you start at the company, the IT department will make installations and prepare your computer for use. There will be some security, some applications. It will be managed by the IT department in certain ways, and Atos Software Group is one of the companies that's doing this. They're having terrific profit margins, and they've had some good growth as well. So this is an interesting company to follow along with and see what will happen. I think that this company perhaps deserves more investment than it has right now, but we will see. As with all things, investing is a waiting game and trying to find those opportunities and add more capital. And indeed, Atos Software could be one of those companies that receives additional investments from me going forward. But as of right now, I've been collecting a lot of cash together just to have the opportunity to potentially buy a property in Dublin. And it's also nice to have a very, very large emergency fund in this current macroeconomic environment with a lot of uncertainty. But it's also very alluring to add the capital to investments, as I think there's potential to make a ton of money in the market right now. And I really like to read all the comments about different investing opportunities and stocks to take a look at. I'm going to look at another energy company here soon from a suggestion of a commenter, and just the potential to be able to find a good small cap investment that could make a lot of money for me going forward. And then we have the rest of the portfolio here. I think it's 9% or something like this. And then we have the other companies such as medical properties, trusts, and some other companies that I follow along on. just to see what's going on that I like. But as you can see with the structure of the portfolio, I like to take big bets into companies and hold on to those that I truly believe can outperform normal market returns. And I know that a lot of portfolio strategists like to rebalance their portfolios. In my opinion, I think that this is wrong. This is not something I would want to do. It's like you have a plant that's growing amazingly, so you stop watering it and giving it nutrition just to give the water and nutrition to another plant that's struggling. Why would I not continue to water the plant that's showing terrific returns and gains and continue to bet on it to get the biggest potential harvest? Alright, that's been it. Looking at the portfolio going into the second half here of 2023. Time really flies. As always, I hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.